All right. Okay, so welcome everybody. As you all know, of course, I go by Adex, and in this presentation, I'll be going over part one of the beginner guide to the Strat. As some of you already know, or you guys already seen this presentation, this is predicated for those that don't know what the Strat is, but also for those of you that want to get a little recap or a rehash of the Strat, this is also going to be dedicated to you too as well. All right, here's a disclaimer, as you all know. I'll just continue on to the next slide. All right, so what is the Strat? Part one, the basics. So what is a Strat? So the Strat is a price action trading strategy that was created by the Commander-in-Chief Rob Smith, known as Robin the Black on Twitter. After more than 20 years of studying charts and price action, he noticed that there were certain specificities when it comes to the way that price moves. Price can only move in three ways. It can consolidate, moving in a direction whether up or down, or it can create an outside bar, and we'll go over this in later slides. It applies across all asset types, meaning that you can use this with stocks, crypto, forex, pretty much any trading vehicle, right? And it eliminates market noise and focuses on what we can only see, which is price action. So the Strat is predicated on price action, price action, price action. When we say that the Strat eliminates market noise and only focuses on price action, we're talking about that this excludes all subjectivity, right? And that is one of the important things about the Strat, that it is based off of just objectiveness alone. What we see is what we know to be true. That's one of the Robisms and something that Rob created. And what we see, what that means is that what we see at that current moment, right? What price is telling us at that moment, when you look at the chart, that is what you should analyze, and that is the data that is getting presented to you. All right. Another thing that about the Strat is that, or one thing about that you should know about Strat or price, is that price doesn't move. Price aggregates. Price movement is simply the aggregation of buy and sell orders that are transacted. So when we talk about like, oh, price moved up, that's not really the case. What's actually happening is that people are slapping the ass and that people are buying, right? When we talk about when price moves down, what we're actually talking about is people slapping the bid and selling, right? On to my next slide. Oh, and we say that the Strat simply works because there are three universal truths or three scenarios that occur, and I'll be going over those. All right. So the Strat scenarios. So the scenario one is our inside bar, all right? And scenario two, make sure you guys write this down, by the way, for those of you that are beginners and are new to the Strat. Scenario one is the inside bar. Scenario two is the continuation or the directional bar. Don't worry, I'll be going over these, right? And you have scenario three, which is the outside bar, which takes out both sides of the range. And when we say both sides of the range, we're talking about the previous range. So whether if you're looking at a daily chart, we're talking about that it took out the high and the low of the previous day. If you're looking at a weekly chart, we're saying that it took out the high and the low of the previous week. All right, so that's what we mean by it took out the previous range when we talk about the outside bar. But before I dive into these Strat scenarios, let me go over the candlestick, because the candlestick is very, 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 very important. So I talk about that the candlestick tells a story. And once you start to understand what I mean by this, and once you start to develop it into your thesis, you'll start to realize, and it will start to help you when it comes up to your analysis on whether you want to go long or short or whatever, right? So for each candle, you know four things about the candle. You know let me get my pointer out. So you have the high of the candle right here. You have the low of the candle right here. You have the open of the candle, and you have the close of the candle. When it comes to a bullish candlestick, right, that will be the color green. Or if you're using TradingView, you can change your colors. But in general charts and chart analysis, or TA, you'll see that it is a green bar. And what that means is that wherever you opened, you closed above it, okay? That can be 1 cent, that can be 2 cents, that can be $1, that can be $100. It doesn't matter. As long as what this means, the bullish candlestick means that you closed above the open. Okay. I noticed, but people need to pay more attention to this because this really tells a story. And also, the fact you should also understand where the close is in comparison to the high, the open, and the low. In this example, we see that the close is relatively near the high, so that is important when it comes to your analysis on when the next candlestick opens. Okay, now onto the bearish candlestick. It's pretty much the same thing, but it's just vice versa. The open is above the close, and what that means is that this is selling, right? So price opened here and then it closed at this level. You have your high and your low. And also remember, if the close is near the low, that means something. That can help you with your analysis in terms of the next candle. So far so good. Let me make sure we got any questions. Okay, nothing so far. All right, cool. Next slide. All right, so scenario one. So scenario one is when we have a bar that is not strong enough to take out the previous high or low, and we call this the inside bar. So if the current bar's high or low, right? So if you look at the current bar, let's take this picture for example. So if you look at this current bar, right, you see that the high does not break the previous high, right? And you see that the low of this bar does not break the previous low. And when we talk about breaking, right, what I mean is that the high, this price of this bar is supposed to go above the price of this bar. When we talk about breaking the low, price of this bar is supposed to go below the price of this bar. The fact that it didn't in both sides means that this is an inside bar. The current candlestick doesn't break either side of the previous candle. This is the same example here as well. Okay. All right, this is another example. The inside bar, high and low, the inside bar is completely covered by the preceding bar, so it does not break the high, does not break the low. Same example as well. Scenario two. Okay, so scenario two. Scenario two is when one side of the previous bar is taken out, and we call this a directional bar. Okay, so in this example right here, you have your high. If you look at this candle, at this green candle, oh, and in terms of my colors, yellow means green, and red is referring to, white is referring to red. So if you were to mark the high and the low of this candle, you see that this candle breaks the high and it never comes to the low of this candle. Because of the fact that this broke the high of the candle, this is a directional bar to the upside. This is a 2 up, okay? So this is scenario 2. This candle only breaks one side of the previous candle. If it breaks the high, it is a 2 up. If it breaks the low, this is a 2 down. So if this candle, let's say if you were just imagine that this candle actually broke the low and it didn't break the high. If it had broken the low and was actually right here, it would be a 2 down candle in contrast to it being a 2 up candle. Hopefully that makes sense, okay? Okay, on to scenario 3. Oh, these are just examples of a 2 up. So this is a 2 up candle right here. And then this is a 2 down candle right here because this candle only broke the low. If you look at this, you're gonna say, wait, but it looks like it broke the high. No, if you actually were to look at the price, this was actually the same price as this candle right here. If it is the same price, it never broke, right? So let's say this high of this candle is at 150.12, and then the high of this candle was at 150.12 and 12 cents. It did not break the high. It actually has to go to 150.13 for it to actually go 2 up, right? But it broke the low, so that's why it's a 2 down, because it actually came below this price. Hopefully that makes sense as well. Okay, scenario 3. Scenario 3 is when the candle, and this is one of the most important scenarios. I mean, all 3 scenarios are important, but this is one of the most important, I should say, factors when it comes to the strat. All right. So a scenario 3 is when the candle breaks both sides of the previous range. All right. And once you know a 3 exists, it will save your portfolio and what I mean by that is that once you're able to understand that like 3s exist and that it just forms, you'll be able to understand where you want to place your stop loss. You'll be able to be less emotional about the trade because instead of you saying like, oh, why is it going against you? If you see a 3, you know what happened. A 3 was formed. You know what I'm saying? And 3s can be the sign of reversal. Rob likes to say, or one of the Robisms is that once a 3, always a 3 cannot be, right? So once you see a 3, it's present. You know what happened. One side is aggressive and you can play it, right, as an actionable signal. The thing about threes, or what's important about threes, is that a scenario 3 cannot occur without becoming a scenario 2 first. So an outside bar cannot occur without becoming a 2. So what that means, right, is that in order for a 3 to actually form, one side had to get taken out first, and then the other side gets taken out. So in this example, you see that price actually opened above this candlestick. So we actually opened up as a 2 up because price was already above the candlestick, the high of the previous candle. So it was a 2 up, and then you see that price started coming down, coming down, coming down, coming down, coming down, to the point where it even broke the low of the candlestick. And because of the fact that it broke both sides, the high and it also broke the low, that is why it's considered a 3. All right. A 3 bar tells a lot about magnitude. So there's three things that the outside bar tells. It shows magnitude, it shows what side is more aggressive, and it also creates a broadening formation. And I'm going to be talking about broadening formations later. Actually, pretty much next when I talk about the 3 key elements to the strat. All right, so this is an outside bar scenario 3. You see that this candle broke the high and the low of the previous candle, which is why it's a scenario 3. You see that this candle, for this example, that this candle broke the high and the low of the previous candle, which is why it's a scenario 3. All right. The hardest for me is creating broadening formation. Don't worry, I got you, bro. I'll show you. That's a lot of traders have difficulty with creating broadening formations, but hopefully we can simplify that for you. So now on to part 2. Before we go on to part 2, any other questions? Appreciate you, Charles, for asking that question. If anyone has any other questions, feel free to ask. If you want me to go over a previous slide, I can do that. Let me know. You know how we doing? Everything good so far? Evoke, type in.
Good. Adex, when we talk about like when the month flips green, or you know, like the full time frame continuity, like when the week flips, the month flips. How I guess I'm trying to understand how that is. Like let's say we have a big ass, you know, red candle for the month of September.
Okay.
So for October, is it just when we open higher than where we close? Is that considered a flip, or does it have to overtake the previous candle?
So I think I think the strategists have different definitions of what they call the flip. For me, what I'm talking about the flip is when you're flipping that color to the opposite color. So let's say you were a 2 down candle, so that means you were red, right? Or let's say, I'm sorry, a 2 down candle doesn't mean you're red. But let's say you're now down compared to prices below your open, right? So you're a red candle. When price goes up and it goes towards its open, and when it actually goes to its open, it will actually flip the color, and when it goes above the open, now it will flip red to green. And that's what I'm referring to as flipping the month, or flipping the week. That makes sense.
Got it. So it doesn't have to basically overcome the previous candle, as long as it just opens higher than where the previous closed.
As long as it opens
to a green candle.
Correct. Now, but we also do take into account if price is above or below the previous close. Like, we still do take that into account. We just don't call it the flip, or I don't call it the flip. Yeah. So, like, for example, if you had let's say you had a 2 up candle, but it's red, right? And then the next month opens green and it's going up. Let's say it gapped down and it's now going up, but price is still below the previous month. Even though the color of the indicator is going to say green, I still recognize the fact that price is still below the previous month, and I still use that in my analysis.
So in that case, that example that you just mentioned, then the month hasn't flipped green yet, right?
So it depends what your definition of flipping green is. So my definition is actually flipping the color green, but other strategy definitions, what you're referring to, actually going above the previous month's price and stuff. So it can be looked at either way. Like, I know what you're referring to if you're talking about that, if that makes sense.
Yeah, because I'm looking at the indicator that I have from Strat, right? And when I see the colors flip, I just don't. I don't know like the colors flipping in reference to which way that you mentioned.
So like when the new month opens and you see like, oh, we're green on the first day of the month and everything. So you got a green month. I mean, you got a green day, green week, and then a green month. I still am not taking that to account. I'm taking into account what is price. Is price below the previous month or is price above the previous month?
Okay, cool. Thank you.
Great question. I will. Oh, TTO is in the second lesson, but if we have time, I'll talk about that. So part 2, the key elements. All right. So the 3 key elements refers to time frame continuity, broadening formations, and inside bars. And so first on to time frame continuity. So time frame continuity refers to achieving the highest probability of trades when one side is particularly present during that trade at that moment. Our goal as a trader is to identify who is actively in control in the given market, whether that be buyers or sellers. And you'll see this, or this occurs when all time frames are pointing in the same direction, and it shows that the different participation groups are agreeing with each other or not. So whether price is above the previous high or it's below the previous low. Okay. Ideally, with the strat, we want to identify and trade stocks that are moving in the same direction in all time frames. So in other words, the best opportunities will tend to lie in stocks that are trading in the same direction on the quarterly, monthly, weekly, and the daily candlesticks. If a stock is trading and aligning to these principles, we consider this and we call this full time frame continuity. All right. So this indicator right here, we have that strat indicator that's in trading view. This is referring to full time frame continuity to the upside. We have the daily pointing up, we have the weekly pointing up, we have the monthly pointing up, the quarterly pointing up, and the yearly pointing up, right? This is an example where you don't have full time frame continuity because you have the hour that is pointing down and it's red, but then you have the day green, you have the week green, month green, quarter green, and yearly green. Our job as stratters, or how the strat is taught, or how we trade the strat, is that you want to trade into full time frame continuity, or how we trade the strat, or how a lot of people trade the strat, is that we like to flip things into full time frame continuity. So for example, when we see an hourly that is down and we see that these other time frames are up, we actually are going to get in calls while the hourly is down because we anticipate that this hourly is going to flip back up into full time frame continuity. Okay, and then we are back and presently in full time frame continuity when that happens. Usually, when you see one, and if it goes from left to right, and you see that one is down and the rest are the same color, this usually means that this is occurring during a TTO. Like this is a TTO that's occurring because you have the hourly coming down, right, red, and then what you usually expect is it to come right back up into full time frame continuity, and that's your TTO. But I'll be going over that later. So this is an example of full time frame continuity to the upside. You have MU green on the day, MU green on the week, green on the month, and then green on the quarter. So this is full time frame continuity to the upside. And notice how I have 4 charts up. This is very important when it comes to multi-time frame analysis. Okay, we should have another PowerPoint on specifically multi-time frame analysis, but I'll go over that later. And then we can talk about TMGs and stuff. All right, but time frame continuity, when you see all this, when you look at the chart, when you see that and for those of you that are not able to enable the 4 chart screen, what you will see if you just have a single chart is that you just go on the day, it's green, the week is green, the month is green, and then the quarter is green when you click on those time frames. All right. This is referring to time frame continuity to the downside. You have a red day, red week, red month, and red quarter. Okay, so this is full time frame continuity to the downside. And how you play it is that you would want to be in puts, or you'd want to be selling, or you want to short the stock because you know that institutions are also selling the stock in all major time frames. Broadening formations. All right, so broadening formations is how price is discovered. We know that price moves in terms of aggregation. Okay, and it moves in a series of higher highs and lower lows. If you look at this example, you see this outside bar. Okay, this outside bar 3. This is a scenario 3, and it's a broadening formation on the lower time frame. I'm gonna mark it real quick so you can see. So this right here is a broadening formation on a lower time frame. If this is the 4-hour chart and this is the 10-minute chart, that 3 that you see right here is literally this right here. That's that 3. So when we connect broadening formations, when this high is connected to this high, this low is connected to this low, that's the same thing as this being connected to that, and then this being connected to that. Okay, hopefully that makes sense. Fine. All right, so scenario 3s are broadening formation on the lower time frame, and compound 3s, there's things that are called compound 3s, and those are 2 up 2 down candles, and you can just combine them with each other, or 2 down and 2 up candle. All right, and they're both, and those two, the 2 up and the 2 down candle, are completely engulfing the previous bar that was before it. All right, this is a broadening formation. Oh, this is just me marking that this is the high of this candle right here. This is the low of this candle right here, which is the same as this low and this low. And you see how this 3 takes out the high and the low. That's the same 3 right there, taking out the high and taking out the low of the previous range. Okay. Mark it right there as well. Okay, so now how do you draw your broadening formations? And hopefully, Charles, this is going to help you. Okay, so once you're able to identify highs and lows, you literally just draw back from the current high to the previous high, and you draw back from the current low to the previous low. So if you see in this example right here, you see that this is a low that is created, right? This is the price action went down. This is a low that's created. You take this low, and then you go to the previous low that was before that. The previous low that was before that is this one right here. So you can draw a broadening formation, and you just connect these 2 lines, and you extend the lines on whatever charting software you use. You extend those lines. Okay, so that's for the downside. For the upside, you see that this 3, this is a high, and you simply just connect it to another. Somebody have a question? No? Okay, so, and you see this high and you connect it to a previous high. All right, that's what you're doing, and that's how you create this broadening formation. That's all it is. So you see this wick right here, this is a high, and all you're doing is connecting to a previous high. This is another previous high. So all you do is draw a broadening formation like that. That's a broadening formation. This is a broadening formation as well. If you really, and the reason why you're not drawing a broadening formation from here to here is because there's a low that's lower than this right here. So this low is lower than that one. Remember, you're connecting things from lows to lows. So this low is connected to the previous lower low before that. And this was the previous lower low. Do you only do it on the 3? No. Actually, you don't only do it on the 3. You can create broadening formations anywhere. So like, for example, this right here, this is a broadening formation connected to this. This is a 2 up candle. This is I think this is a 2 up. This is a 2 up candle as well. But because this is a high and this is another high, that's all you need. All you need is a high. Like everyone gets, not everyone, but like people get like, oh, you need to see a 3 to create your broadening formation. No, you do not. All you need is a high connected to a previous high and a low connected to a previous low. So hopefully that helps us, and I'm going to be going over more examples later. All right, so scenario 1, inside bars. We look for inside straters. We love inside bars, and the reason why we love inside bars is because inside bars are actionable signals I'll be going over in a later slide. Once we see an inside bar, we get so excited because we know exactly what to do when and because we play the inside bar breakout, right? And so in order to like in order to get into your position, all you have to do is that whatever side the inside bar breaks, right? You take that side, whether it be long or short. So let's say that this bar breaks the high, right? Then you go long. Let's say if the inside bar breaks the low, then you go short, okay? And when I'm talking about when I say when you break in the inside bar, I'm talking about the new candle that forms, and I'm going to be talking about that. All right. The importance of the inside bar is that it means, or it represents consolidation. neither buyers or sellers have control of the stock, but when it comes to the inside bar breakout, you will know who has control once that side breaks out, because we will enter on the break of the inside bar on either side. Okay. These are just examples of an inside bar. So this is in this inside bar within this range, right? You have the low and the high that's within, or that couldn't break the previous low and the high. You have this inside bar here that couldn't break the previous high or the low, right? And you have this inside bar where you couldn't break the previous high or the low, okay? And how you play the inside bar breakout, you literally, what you can do is, right, prior to this chart forming, you can literally mark the high, mark the low of your inside bar, and then if price goes down and breaks and forces your inside bar, you take puts. If price goes up and breaks your inside bar, you take calls. That's how you play the inside bar breakout in its basic. That's literally how you play the inside bar breakout. Okay. Go to the next slide. Another example of inside bar. All right, we don't have to do the. Oh, actually. All right. So inside bar in this picture, you have two inside bars, and then you have two, which is the same thing. Outside bars. Okay, this broke the previous. That's an outside bar. It's an outside bar, broke the previous range. Sorry, outside. Same thing. Okay. Everything else is a 2. So everything else that's not a 1 or that's not a 3 is a 2. Let's say it's a 2-1, but the 1 is red. Would your bias be puts? Great question. So in the basics of the strat, right, when you're learning the begin or just the basics of the strat, the color, there's no bias when it comes to the color, or the color, or what I should say is that there's no the color doesn't represent anything. It's more just the price action, right? So what we're looking at is the fact that if price breaks above, below the previous bar, or it consolidates or breaks both sides, or breaks both ranges. When it comes to the color, you're not supposed to have a bias, because of the fact that, like, if it's an inside red candle, you just know that price didn't break below, or price didn't break the previous day's high or low. That's all you know, right? You know it's red, but when it comes to the strat, you just care about the price. Did price break the previous bar's high and low? No. And so let me know if that makes sense or not. Going to my next slide. Hey, all right. So the truth about the strat. So we know that price doesn't move, it aggregates. And we like to talk, and when I think about price aggregation, I talk about like price occurring in pairs. For every buyer, there must be a seller. So of course, when there's more buying, that means that more selling has to occur, which creates volatility and price movement. All right. Price action is price action everywhere and anywhere. So, and the strat only follows price action, so it can be used in any asset. Price discovery works in a series of broadening formation, and we know that simply because of the fact that outside bars exist. An outside bar cannot occur without being a 2 first, so you can think to go long on a stock, but then when price just falls and goes against you and then breaks the previous low, this is what creates that fail 2 up, and it can lead to a 3 being created, which is that outside bar. We also like to say that the strat is right, but when we say that the strat is right, we don't say that you're gonna win 100% of the time. And the reason why you're not gonna win 100% of the time is because of the fact that 3s simply exist. So all the strat does is just it follows price action. All right. So, and yeah. Let me see. Is there any more questions? Oh, another thing. The strat is not subjective. It tells you what is happening, and once you remove the bias in your mindset when it comes to trading, and when it comes to understanding the strat, you'll realize and you'll truly understand the true objective nature of the strat. All right. Any questions so far? Because now I'm going to be going over the strat guide. We good. All right, we're good. All right. So part 3, trading the strat. Okay. So this is a strat guide, and for those of you, make sure you download it. We have it in the strat resources. Make sure you memorize it. And when we say memorize it, because we want you to understand why these actionable signals do what they do and how you're actually able to trade them. Now, you don't have to memorize all of them at one time. When it comes to trading, you can be trading one actionable signal. You can get familiar with it and comfortable with it, and then you can move on to the other actionable signals. Ultimately, what we were trying to do is that we want you to get comfortable with an actionable signal to where you're able to trade it and be comfortable, and then you can start like moving up and advancing when it comes to that. All right. Now, when it comes to actionable signals, we have your inside bar, we have the hammer, we have the shooter, we have the Momo hammer, and we have the Momo shooter, and we also have other actionable signals like the combos, right? When it comes to the hammer, I'll be going to the inside bar first. So just like back to what I said, and when it comes to the inside bar, the reason why it's an actionable signal is because we're playing the breakout. Rule number one when it comes to the inside bar, you never want to trade the inside bar itself, okay? Well, actually, let me update on that because we do be trading inside bars. But in terms of the strategy and when it comes to in terms of the inside bar breakout itself, you're not actually trading that inside bar. You're waiting for the next candle to form, to open, and then you're playing that candle, all right? So you see the inside bar and you don't just hop in the play. No, you wait for that inside bar to close, wait for the next candlestick to open. So if that's on the daily time frame, then it literally means you're waiting for the next day, and then you're playing whether it goes 2 up or 2 down. All right. Inside bars are consolidation bars. You can assume to be faked out during this consolidation because it's just literally buyers and sellers. How I can say it, buyers and sellers attacking each other. But the break of the inside bar leads to the expansion, and we are present when the break occurs. So if we go 2 up above the inside bar, we're buyers, and we're in calls, and we are present in there. If we go 2 down, we're selling, we're in puts, we're present in that as well. All right. When it comes to the price targets, a lot of people ask like, where are my price targets when it comes to the inside bar? And this is very, 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 very important. All right. So when it comes to the price target is that when you're looking at the inside bar, or when you're looking at the strat, when we're talking about strat actionable signals, we're usually talking about it in a combo of 3. All right. And the reason why we're talking about a combo of 3 because it helps you in terms of your price targets. So when you see this is a 2-1-2, right? Remember, this is a 2 up. Let's say there's a bar right here. And yeah, so let's say this is a 2 up candle. This is a inside bar candle, and this is a 2 up candle because it went 2 up over this 1, right? Your target for it to take profits is going to be the top of the 2 up, the previous 2 up candle. Okay, so I'm going to say that again. When you break the upside of the 1, your target is the top of the 2 up candle, assuming that it's above the 1 as well. All right, hopefully that makes sense. And if it doesn't make sense, please make sure you ask. The price targets are the wicks of the preceding bars. These are where buyers and sellers place their stop losses and place their previous stop losses, or this is where previous market orders. And I like to say that this is the point of decision making for us as a trader, because once you hit your price target, you have to analyze the play and ask yourself, are we going to continue? Are we going to reverse? Or are we going to consolidate at this point? Every single time it hits a price target, you should be asking yourself those 3 questions. All right. So when it is reversed on you, you can't be mad that it reversed on you because it hit your target. All right. Actionable signal. So Momo hammers and shooters. So the Momo hammer, or the hammer itself, is an actionable signal only if and only when you see the continuation off of the Momo hammer or off of the hammer. So when you see that hammer becomes actionable when the next candle opens and it goes above the hammer, because then that therefore is a continuation off of the hammer. Remember what I like to say when it comes to price. When I like to say that each candlestick tells a story. This hammer, what creates a hammer? Price comes down, so sellers are initially in the position and they're selling. Then buyers step in and then they come right back up, right? They come right back up, and then the next day you see that continuation, and it's just a continuation off of this hammer. So imagine this candlestick this is just a continuation move. You'll often hear me say like all all that occurred was just 4 p.m. Eastern. What I mean by that is that price is continuous, and like what you should not realize, but what you should understand when it comes to price action is that like they don't just stop doing whatever they were doing in the previous day, right? You know, obviously gap downs and gap ups can occur and stuff like that, and you can change market direction the next day. But if you see a hammer and you see a continuation, like you go 2 up off of that hammer, that is simply a continuation move off the previous candle. Whether that is on the daily chart, weekly chart, whatever chart, all that is a continuation move off of that hammer, and that becomes actionable. Remember, what is going on in this candle? You see that buyers stepped in after price went low, and they continue to bring price all the way up and all the way up. And so you know you're a buyer because this candle told you they're buying it up. Hopefully that makes sense. Now, vice versa, the shooter. The shooter is the opposite, where price goes initially up and buyers are in the position, and then sellers all of a sudden come in and start bringing price down. When you see the shooter form, and what you can see is that you'll see the body at the lower end of the candlestick. This becomes actionable when you get the next candlestick and it goes 2 down off of the shooter. Just like with the hammer, this is just a continuation move off of that shooter, and the only reason why you have a new candle is because of 4 p.m. Eastern. If this was on a daily chart, right? Because sellers were still here. The people who were selling here were here from here, right? They were selling from this position, and this is just a continued sell-off. So when you see that hammer, you mark the low. I'm sorry, the shooter. You mark the low of the shooter, and when you get your 2 down from the shooter, that's when you get into the play, right? Hopefully that makes sense. This is an actionable signal off of a hammer. Important. Think of the hammer as building something up, right? So you bring price down, then all of a sudden they build it back up, and then you get your move, boom. That's your hammer. This was, the buyers stepped in at this level, and they continued to buy, and you see the continuation of buying. You have this gap up here, but this is the continued move off of this, right? You just gapped up the next day. Sense? Okay. Shooters. Oh, I already talked about that. You enter out the shooter, 2 down. Okay. Oh. Just because you just because you see a shooter doesn't mean that you get out right away. Okay. So let's say you are in calls, right? And all of a sudden you start to see a shooter form. You do not necessarily have to get out because of the fact that you have to wait for that next candle to form for that shooter to be actionable. Sometimes you'll see that they bring price down. You can see like an inverted, what is it? A hanging man? A hanging man, where they'll bring price down, and then actually the next candle they'll just come right back up, and they'll never become actionable because they never actually went 2 down, and you could still be in the play, right? It's just all it is, or what that indicates is just profit taking, but then them coming right back in to continue the move, right? Hopefully that makes sense. It has to, when you see that shooter, you have to wait for the actionable signal for the next candle to form. Just like with the hammer, you have to wait for the actionable signal for the next candle to form. All right. So when we talk about entries and your exits, right? Just like how I said, when you're looking at it in 3, like a 3 candle combo, right? When you see your actionable signal, especially with your inside bars, because this is a 2 up, right? Why is this a 2 up? This is a 2 up because compared to the previous candlestick, this went 2 up, right? Didn't break the low, broke the high. And you have your inside bar, which is inside this range of this candlestick. Then you get your 2 down. Your entry for the inside bar breakout is at the bottom of the 1, and you take profits at this bottom of the 2. Okay, you always look to the 1 to the left of that inside bar to see where your profit is, and that is where you're going to be taking profits. Okay, you exit at the wicks of the preceding candles. Okay.
What about stop loss?
What's that?
In that example,
yes.
Picture, where would your stop loss be?
In this example?
Yeah.
So in the basic strat example, your stop loss would be at the top of the 1. Now, however, depending on whether you use equities or options, and depending if you're a scalper or a swing trader, some people like to place their stop loss right below their entry, right? Because they want to have a tight stop. So they'll place their stop loss right below their entry. I have this stop because of the fact, you know, the 50% rule and things like that. If it goes 2 down, then the next day I can just continue going 2 down. That makes sense. But in terms of tight, like having tight stops, your entry is a little bit below. Obviously, your exit is a little bit below your entry, your stop loss.
Yeah, because I used to think the stop loss was at the opening of that candle.
At the like right here.
Like the very top of it.
Right here.
Yeah.
So
and that's how it top out on plays, and then the TTO is in reverse,
and then it comes right back. Yeah, that's why I don't. So and some strategists say like, oh, the candle that you use to enter on, you should place it at the low of that candle. So which is what you're talking about, right? But we often see it with price action that, and if you trade options, that we're getting stopped out if we place that and just for it to come right back down. And that's why I would prefer the bottom of the one of them. Great question. Right. We just went over it, but let's say you were to enter off this 2 up, you would place your stop loss right below it. If you wanted to use tight stops, you'd place your stop loss right below it. But now, sometimes, I don't want to say oftentimes, if you place your stop loss right below it and you see yourself getting stopped out, then that's when you start to analyze, all right, do you have too tight of a stop? Should you place your stop a little bit lower? Instead of you using that as a stop, should you place it below the previous wick? That's going to be ultimately up to you, and it's really relative on each play, to be honest with you. If you're in a swinging play, you might have a looser stop loss, if that makes sense, because of the fact that it's swing and you need it to materialize. All right. Oh, and when it comes to entries, usually, and when it comes to swings, all my swings, you want to start with a starter position and then you add on the confirmation of the breakout. Because with price action, you'll see that like you can get an early entry and then price can come right back down, and you can average in at a lower price, or you can average up once it actually confirms the move, right? Hopefully that makes sense.
I'm sorry. When you say starter on contract, or do you mean like what's your starter?
So it's relative. So it's relative to your account size, and it's relative to what you can handle, right? So like I have the 1 contract, and I have the like, if I'm playing like if I'm using a certain amount, right? So let's say, for example, if it's $1,000 that I want to put in the entire play, I'll say that my starter will be $200. So I'll buy whatever contracts that starter is, that amounts to $200 if that's 4 contracts or whatever. But your starter, for me, your starter should always be how much you're willing to lose on that play. Because you oftentimes, not oftentimes, but you, with the starter, you'll have to see that play actually actually work itself out, and it may take time and it may be negative. So whatever you're willing to see that play become, like whatever you're willing to risk, that's how much your starter should be.
All right, thank you. That makes a lot of sense.
This is Alifar. Yes, I can definitely talk about the J&J trade. Definitely. Okay. Wait. Okay. The strat language. You already know what the 1, 2s, and 3 stand for. You know about the UD, the up and downs, 2 up and 2 down. We talk about 2 1 2 up, right? So you will often hear us say like, oh, okay, SPY just went 2 up on the day. We're meaning that like SPY, what that means is that SPY just went 2 up of the previous day. So it just broke the previous day's high, right? We'll say like, oh, we got an inside day on Costco, or we got an inside hour on Costco. What that means is that the current hour for Costco is currently an inside candle, and we're looking for a possible break up or break down to do that 2 up or 2 down off of that inside bar. Okay. And that's the language. And often, and what's beautiful about the strat is that like when we're looking for our setups, all of us can relate and all of us understand when someone says like, hey, we got like Netflix is showing the 2-1 on the week, and we're like, oh, all right, inside bar breakout possibly, whether that's going to be up or down, and we're all able to understand that and put that on a chart and things like that. So that is a strat language. Other things as well, whether you want to screenshot this, these are some other strat languages. Okay, Strat combos. This is just another cheat sheet. Make sure you guys memorize this, ladies and gentlemen. Make sure you memorize this, and make sure you see which one you like best. Right? You want to trade. You want to trade the actionable signal that you are most comfortable with, and then you can start working your way to the other actionable signals, and then ultimately you're going to get to a point where you look at a chart and you're going to see every actionable signal that played out, and you're going to be able to just like literally quickly say, oh, this is the actionable signal that's coming up, and you can see it on multiple time frames. Is your continuations. You got your 2-1-2 bearish continuations, 2-1-2 bullish continuations, right? You got your 2-2 continuations, stuff like that. You have your reversals, 2 down, 2 up reversal, 2 up, 2 down reversal. Remember, this is irregardless of candle color. So a 2 up candle, it can be a red 2 up candle, or it can be a green 2 up candle. As long as price just broke the previous range's high, that's what's considered a 2 up. It's irregardless of the color, okay? 3-2-2 reversal. These are just examples that I'm showing. So this is an example of a 3-2-2 rev on the month for Apple, right? An actionable signal. So you have your 3, bearish engulfing 3. Then you had a 2 down candle because it broke the low of the 3, but it was a green candle. Then you had your 2 up candle because it broke the high of this 2. So it's a 3-2-2, 3, 2 down, 2 up reversal. 3, 2 down, 2 up reversal, because we reverse back to the top of the 3. Hopefully that makes sense. 2-2 reversal, 2 up, 2 down reversal. This is the case where you have a 2 up candle and you have a shooter, and then you have your 2 down candle, and then this is your target. You're looking at 3 candle structure. So if you go 2 down, you enter here, and your target's going to be this right here. Okay. All right. Okay. So you have your pivot machine guns, okay? So this is your pivot machine gun. Your pivot machine gun is simply, okay, so your pivot machine gun occurs after you have a continuous movement to one particular side. So let's say you have a series of 2 up candles, right? And what happens is, I'm just going to illustrate it for you. So let's say that you're a buyer, right? You're a buyer and you buy up. You see this hammer 2 and you're like, oh shit, like I'm about to buy. Then you have this inside bar. You have this inside bar and you're in this play, and you get calls once you break above this inside bar. So once you break above this inside bar, you place your stop loss at the below of this candle. The next day you go 2 up again and you're like, oh shit, I didn't expect to go 2 up. So then you place your stop loss and you move it up, because what do? We like to walk our stop losses up, right? The following day, price goes 2 up again, and you're like, wow, I didn't think I was going to be this up. And you're going to be walking your stop loss once again, because of the fact that's how you want to remain profitable, right? Then the following day, all of a sudden, you're going to have this sell pressure. And what this leads to is that all these people, I like to say it like this. So you had all these different participants that were in the same play as you, right? And they noticed that price was going up, so they all moved their stop loss. And some people left their stop losses in like these places. This person left their stop losses here. This person left their stop loss here. This person left their stop loss here. This person left their stop loss here. And what happens is that as soon as price starts to come down, you'll see that it starts to trigger each of these person's stop losses. And what happens is that it leads to an increase of selling pressure. And that's what leads to this big cascade move to the downside. Because I want you to think about this, right? When this person starts selling their contract, let's say that let's say like this person has 1 million, this person has 1 million, person has 1 million shares, this person bought 1 million shares, this person bought 1 million, right? And then, so as soon as this person gets out of their position, so that's 1 million shares out, then this person gets out of their position, that's 2 million shares out. This person gets out of this position, that's 3 million shares out, and that's a decrease in selling pressure, right? And then that is what leads to this increase in this cascade effect to the downside. So that's your PMG. So when you see, like right now, you see as SPY is going 2 down, 2 down, 2 down, 2 down, 2 down, 2 down, 2 down. What it's leading to a possible PMG back to the upside, if that makes sense. And now let me show you some examples. This is a PMG back to the upside because you have these pivots right here, right? You had price coming down, right? And people had if you went short, you place your stop right here, you place your stop right here, 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 place your stop right here. And then as soon as price triggered, and it just led to an increase, a big move. And I'm not gonna do, I guess I'll do the sound. We like to say brrr. That's what the PMG does, because it's fast. That's how it occurs. This is the PMG back to the downside, where you see SPY going up consecutive days, and boom, comes all the way back down, right? All right. So these are a couple of examples. Actually, before I go to the examples, now I'm going to be going over trading view, because I'm going to be showing you how actually price action occurs. Let me actually go to the trading view part. Any questions so far before I go over?
Does it matter if it's inside or outside month, week, or whatever when it comes to full time frame?
Does it matter if it's outside week?
That example right there, right? I think the quarter is yellow, so I guess that must like it's an outside quarter.
For which example?
You just had a chart up, and I just saw.
Let me see.
Yeah, okay, like that one for example. You see how the day has that white, year has that white box. I think that's just saying that it's like inside or outside.
Oh, let me see. I actually don't know what the box is. Oh, is it referring to outside, inside, or outside? Do you know?
Yeah, I think it depends on your settings and how you tweaked it. But the color and the shape lets you know that it's an inside or outside.
Ah, okay. And then if you go in the year, yep, you're right. Okay, your year. You're correct. You are correct. So with that being said, does it affect my analysis? It just affects my actionable signal, right? So like, because of the fact that I see SPY that's a 3 on the day, then I'm looking to see where we're going to get that 3-2 continuation, if that makes sense. Yeah. All right, let me show you one. What's moving fast right now? Okay, so Sol USD so Sol actually right now is performing an inside bar breakout. So you see that inside bar, and then you draw your highs and lows, high and your low, right? And whatever side it breaks, that's your inside bar breakout. And your target is the high and the low of the previous bar. The price target right here, and this price target right here. So your target for Sol, when you break this inside bar, your target is a previous candle's low or high. So if you break it to the downside, then your target is the low of the previous candle. If you were to break it to the upside, right? If you were to break it to the upside, your target is the high of the previous candle. Okay. Sense. Do examples real quick. Dang. And then please let me know if you have any questions, because this is just simply, I'm just going to be going over chart examples. Right. So this one, you see Disney on the day, right? You have your inside bar. You mark your high and your low. Okay, this is your daily put call trigger, daily put trigger. Okay. Then you mark your targets. Boom, right? So you see that Disney broke 2 down off of this inside bar, and you take it all the way to the target. And once it reaches your target, you take profits. Now, depending on the magnitude of the move, whether if you're looking at all the time frames and you're looking at the major time frames, if it's setting up for a possible continuing move, that's relative to what the actual market and stock is doing, All right. So, but you're making sure that you're taking profits at these targets, because then you know this, the completion of the play is the play is completed. The strat, in terms of the strat, the play is completed. All right, because that's your actionable signal, and you take it to your actionable. I'll show you another actionable signal. Signal. This is a hammer. this is a hammer off of a Broadening formation, right? You can see that price, they brought it down. Oh, and this is a beautiful example, because you see this is kind of a hammer right here, right, on Disney, but you see that the following day there was no actionable signal off this hammer to go to up. So because of the fact that there was no actionable signal to go to up, you don't go long on Disney that day. But this day, unfortunately, it was a gap up. But this is a hammer off the Broadening formation. You see that buyers came in after they were initially selling the position, and then you see that continuation from that hammer, right? Buyers are still in this move. Gap up, and then you see the continued move. It all started, I like to say, like, it all started with this, but it didn't, not necessarily, but I like to say, like, hey, it started with the hammer, and you could have been there from this point. Boom. That makes sense. So let's say you enter 4-hour entry was a 2-1, and you said to trade on all time frame. Would you use a 4-hour candle for your exit, or check out other time frames to exit? Okay, so in the basics, or not the basics, but just in the general like strat rules, because of the fact that you're taking your entry on the 4-hour, like your 2-1-2 on the 4-hour, your exit is on that 4-hour, so the top of the previous 4-hour candle. That's what the exit is supposed to be. But once you once you get comfortable with like taking profits at your exit and understanding how price occurs, and you start getting those aha moments, then you're going to be looking at things on these larger time frames, and you're going to be looking at things at the full. Actually, it's not even after. You want to be doing that now. You want to be looking at things at the whole, get the whole view right now. So if you see, for example, that like your 4-hour entry, you go 2 up 2 on the 4-hour, and your exit for the 4-hour happens to be like 10 cents away for you to go 2 up on the day, in that case you might be reluctant to take profits and say like, oh, you might actually wait for that entry to go 2 up on the day, so you might actually see if price wants to continue going forward. Hopefully that makes sense. Hopefully that makes sense. Let me know. But yeah. Okay, perfect. This is Disney. This is another example where you have an actionable signal. You had your 1-3 rev strat. Your 1-3 rev strat is an actionable signal where buyers, and you see that it's red. So once so we talk about how the strat doesn't, it's irregardless of candle color, but you can use the candle color to help with your analysis to give you more confluences to your play. So for example, this Disney example, we have a 1-3 rev strat on the day with a bearish 1-3, right? I would be more confident to take puts because of the fact that I have a bearish 1-3 rev strat, and the low is close to the close is close to the low, is relatively close to the low. So in this case, I would be biased short because of the fact that the close is so close to the low, and I know we can really trigger that 3-2 down. Yes, a lot. So it's if you just want to trade the strat on the basis of the strat, on like, oh, this is the basic, I'm taking this 2-1-2 up and taking it to the target, then you want to take it to that. You want to take it to the target of the candle, but like, I'm gonna be honest. When we're trading the strat and we take a 2-1-2 up trigger, price may not get to that ultimate target of that top of the 2. There are price targets before that you possibly need to be taking profits at before it reaches your ultimate target. And that's actually I'm actually glad that we're talking about this, because there's a misconception that, and let me see if I can find an example. And now let me see, it would be like a monthly or a 2-week something, like an inside bar 2 week. Cool. I need a big bar. I'm looking for a big ass bar. Oh, okay, I can use this one. Okay. Okay. So 3-2 up. So you have a 3-2-2 rev on the 2 week. So I'm looking at this right here. So I'm looking at this 3-2-2 rev. So you see this is a 2 week chart, right? And so you see that this is your entry and then this is your exit, right? Because you're entering on this 3-2-2 rev and then you're exiting on price target. All right. So yes, you're when in terms of the strat, as soon as you see your actionable signal, you take it to your target. But when we are actually training the strat and with options, right, we understand that there are price targets before you get to your ultimate price target. So, and I'm glad we're talking about this because one trader, one member, they said that like, oh, I took the inside bar breakout and I was waiting for price to get to like, you know, whatever that price target was. And I was like, but that price target was like $30 away. Like it probably wouldn't get there. But they didn't. But the reason why they didn't understand is that you have ways to get into your ultimate price target. So like Tesla, for example, on this 2 week, although the price target right here is at 21.12, there's another price target before this 21.12, and that's actually right here at 20.40. Right? So you want to use previous wicks as well because previous wicks are where previous orders were placed and you can see possible support and resistance at those previous wicks. So I'm just saying this hypothetically. I don't know if this is actually the case, but let's say like Tesla went up and right when it got to 2040, there was consolidation at this level and you actually had a 2 down day after it hit 2040. The reason why you had a 2 down day is this is based off a hypothetical is because you hit that price target. So not often, but sometimes you'll see price, it triggers the actionable signal, but you can only take profits at those price targets before the ultimate price target. And that's what I'm talking about, the ultimate price target. I'm meaning like, what's the ultimate magnitude, right? So hopefully that makes sense. Like you'll see actionable signals and yes, but just based off the strat alone, you're supposed to take it to that target, the top of the 2 or the top of the 3, bottom of the 2, bottom of the 3. But if you're trading, you understand that like there can be certain resistances or support and resistances that can get in your way before reaching that ultimate target. Hopefully that makes sense. But that was a great example. That was a great question. Do we have any other questions? Because right now I'm just looking at these charts and I'm just showing you like, all right, this is an example of a Tesla on the 2 week. You have a inside bar breakout. You take price at this inside bar and you take it to the top of the 2, right? But then you see that price wants to continue going up. So where are your other price targets? You look back, right? And your other price targets are going to be the wicks of these candles. There's another price target right there. 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 Right? And so hopefully that helps understanding where are these price targets when it comes to the strat. You can hit your price target for the 2-1-2 up, but if price wants to continue going up where you want price to go, you're marking these other potential price targets as well.
Let's say you have an actionable signal 3-1-2 rev on the 2 week time frame.
Okay.
And it triggers, because it's on a 2 week time frame, would you say that you're expecting the play to play out kind of within 2 weeks, so you should buy minimum 2 weeks out?
Because it's a 3-1, right? I automatically am biased that it's going to give me a 3-1-2-2-2-2-2, right? So if that's the case and you're saying it's on a 2 week chart, so think about it, that first 2 is going to take 2 weeks to play out. If you know you're going to get that potential 2, right? Oh, here, this is a beautiful example.
When I see a monthly setup, like, okay, maybe I'll buy this contract for a month out. So, I don't know if that's like kind of the right mentality or.
So it is. Let me show you. Let me see what you want. Us.
Like laser beams at a club.
I know. Oh, Energy. So oxy. What did it do? Okay, so 3222. Okay, here we go. Boom! I love it. Yeah, hell yeah. This is why I love the strat. There it is. Found it. Boom. There you go. You see this? 3-1 baby. 3-1. See that ass later. See it? So that's why I say the time frame is freaking ridiculous. Oh, hold on. Let me see. The strat is ridiculous because when you see a 3-1, like, and it's on the monthly, I go into it like, oh, you could possibly give me a 3-1-2-2-2-2-2, so I'm gonna get a couple months out. You know what I'm saying? And just like the same thing for the 2 week, if you see a 3-1 on the 2 week, you're like, oh, you can give me a 2-2-2-2-2. So what is that? If you give me 3 2s, that's 6 weeks. So what? I need to buy 2 months out just to prepare for that 6 week potential 6 weeks. That makes sense. And that's why I say that quote that I say, price action anywhere is price action everywhere. Because if you just see that actionable signal on the time frame, like it would tell you what you need to know about the play on that time frame. That makes sense. I gotta take a picture of this, bro. I'm telling you, I've been taking pictures of 3-1-2s lately because oh fuck. Oh, here's another. Oh, beautiful. I can show you this example. So reason why I say price action anywhere is price action everywhere. Watch this. 3-1-2-2-2. 3-1-2-2-2. PG, this is a 4-hour. 3-1-2-2-2. This is Moderna on the 4-day. 3-1-2-2-2. See another one. Dun, dun.
That's 3-1-2 rev, right?
Which?
I mean, like these pictures that you're saying 3-1-2-2-2 because like 3-1-2.
Oh,
rev,
so this one is a 3-1-2 continuation. This one's a 3-1-2 rev. So 3-1-2s, 3-1 like so 3-1s, whatever the 2 is, like you can either okay. So 2 things. And shout out to the homie Baxter and AdexTrades because we had an analysis on this, and they were like, hey, sometimes we see a 3-1-2. Let's say we get a 3-1-2 up, and then they'll see that you get a 2 down candle, and then it leads to a consecutive series of 2 down candles. So we came up with the analysis that, hey, so when you see a 3-1-2, don't just jump at the first 2 and be like, oh, okay, because it went 3-1-2 up, you're just going to full port calls. No, that's not the case. Because what can happen, right, is what you can see. You can either see a 3-1-2 up, 2 up, 2 up, 2 up, 2 up, 2 up, or you can see a 3-1-2 up, then 2 down, 2 down, 2 down, 2 down, 2 down, 2 down. So really wait for the second 2 candle. That's really going to be the direction of the actual move. That's what we've noticed when it comes to these 3-1 setups. That the second 2, so 3-1-2 up, and then the second one, then boom, then you know the direction. That makes sense.
Dude, that's a good nugget for sure.
Yeah, bro. Like, and that's sometimes. That's why shout out to AdexTrades. He loves playing those 3-1 setups because, like, literally we had an epiphany that night. Like, we'll never forget that night because we were just looking at 3-1s and we're like, bro, they happen almost all the time. And we're like, yeah, on any time frame too. That's why I say, like, yo, these 3-1s are crazy.
You're damn right. That's why I like to play them down inside balls. That's what I used to like look for. Simply on run straight.
If you could just like, you can just literally just look for 3-1s. Just look for 3-1s because they have a possibility to give you a 3-1-2-2-2. And remember, as long as we got the possibility, then we're in there. You know, if it's gonna tell us, hey, you have the possibility to go 2-2-2-2-2.
You know how I was saying, shots of like, tickles that y'all watch, or just that just make explosive ass moves and shit, and go back and look at them setups, and man, you'd be surprised at like, it's like you start looking for it.
Bro, it's crazy. It's crazy. Like, and that's why, like, you see why, like, I say this shit is like, every day I'm like, bro, the Strat is a cheat code, because you could literally look for those setups and then it's just gonna do it. Like, and it's like, what, like, every single, and that I have this, like, this big, I'm trying to study this, but I really want to know, what is it about this outside bar and this inside bar that creates this pattern? Like, what is going on in buy and sell orders within this candle structure that leads to such an explosive move? Like, I really want to know, like, what's actually going on within orders. Like, is this really just price buildup here, and then that's what leads to it? I don't know. I have to figure that out. But it's just that every single time you see a 3-1, or not every single time, but a lot of times you see a 3-1, then you can see just an explosive move come right after.
Does the same apply if you see a 3-1-1?
Yes. Watch this.
I wanted to mention that I seen Apple got that on.
Hello, 3-1-1. 3-1-1, boom, boom.
So that 3-1-1 right there, would you still wait for that second 2, or you think after the 2 ones, that first 2 should be?
Oh no, I'm taking off the first one. You know why? Because you have you have 2 actionable signals within each other. You have a 3-1-1, and you also have a double inside.
And a hammer's on that.
And a hammer. So it's like, bye bye, see you later. And you see, oh my god, beautiful. This is beautiful. Okay, this is where you start having confluences, because you see a double inside on the month, right? And you also have a hammer. And so you're saying, like, this is 2 months worth of consolidation. And remember how I talk about, like, how much you consolidate, that's how much the breakout can be, the possibility of the breakout. So think about this. You have 2 months of consolidation that leads to a possibility for at least 2 months of a breakout. What happens? Boom, month
All
1,
right, so
boom, month 2.
I don't mean to cut you off, but so, like, as soon as that break, literally fucking load up, or what?
If it's a month, well, this is hindsight, unfortunately. But now that I know what Oxy does, or not Oxy, but Energy, what it does after consolidation on the month and stuff, where it actually can run for months like that, I am buying 3 months out as soon as I see. If I'm buying 3 months out, double inside on the month, yeah, you at least double inside, because you want to take advantage of that second month if you can, especially if it doesn't break. Especially if you don't break below your trigger. And it wicked your entry to go long. This would have wicked your entry to go long. So on the second month, it came back. And let's see how it played on the day. Three. Oh, whatever. I forgot what it was. But yeah, hopefully that makes sense on the double inside bar break and stuff like that. Any other? Let me see. We got any other question?
I know you don't trade for it, but what do you think of it, like a month out or whatever?
So it already did. See, this is why I love the Strat, y'all. Look at that. Look at that. 3-2-2 rep perfectly. Hold on 1 second. This is why at price action anywhere is price action everywhere. All this was. No, what was it?
And you're gonna see it and you'll be like, yep.
3, 2, 2.
Follow that. It looks like right now. Remember to remember.
Wait, where is it? Where is it?
Trading chat. 212.
Yeah. Perfectly to the T.
It.
The T.
Beautiful.
And that's why it's like, Strat told you. Strat told you. Strat told you. 1, 2, 2. That's why I want PayPal so bad. Look what PayPal doing. PayPal triggered 1, 2, 2. So PayPal, what you need to do, that ass to the downside, boy. But yeah, any other questions? Any other questions? Hopefully this helps. I know I don't like going too long, especially for those East Coast folks. Questions? For swinging monthly, so for swinging month, so if I'm actually like, if you're referring to monthly contracts, not swinging entry, for entering monthly, no. So if I'm entering on the monthly, okay, so it depends. So if I'm entering on the monthly, like for example, PayPal right now, PayPal went 2 down on the month, but then the reason why, okay, so the reason, if you guys look at my watch list, the reason why I have PayPal for the last 2 days is because of the fact that I want this move like hella bad. I want this shit hella bad, because this goes to $68, and so I'm just waiting for this shit to break in force. But then today it went up on some bullshit. I'm like, bro, just hurry up and come out. But as soon as it starts breaking in force, I'm getting puts for this shit. But you know, the market is down, so I'm trying to see if we're gonna get a relief bounce or not. But in terms of actionable signal, 1, 2, 2 red to the downside, like nothing stopping it if it wants to break in force, right? And that is goes from $85 to $64. So I'm entering because I mark my monthly trigger to go to down on the month is at $85.27. We already triggered it, but we're still hovering around the monthly entry. Oh baby, they gave us a 3-1. Market might wait. Is the market dumping? What's going on? What's going on right now? What's ES doing? It's dead. Damn it! PayPal gonna flush tomorrow, man. So I don't think I'm like a very important area. I have all night, but that app was... So like, wait, what? Why, J-Man? You in PayPal? Wait, cause do you see what I see? Wait, PayPal's a 3-1 set like something tricky and all of them like cut it.
It looks like a see you later.
He has a 1021. Oh, he did the 85 puts. You a dog. You a dog. He said he about to get $20 in the money on these. That's crazy. Oh, if it gives it to you, bro, congrats. Because I want it too. Dude, okay, so this is the reason why I want PayPal. So see, that's why I fuck with you, J-Man, because we see the same shit. So PayPal, look at this shit. It got a gap right here. This is the gap. This is the first gap for PayPal. Oh my god, if this shit dumps tomorrow, I'm gonna be so pissed, bro. Because I waited for this shit. Yeah. Let me show you. So this is why. And this is how, like, you know, this could, you know, my swing analysis and stuff like that. How I come up with my swings. So you have a gap right here for PayPal. Oh, you are a dog. You in the 85 for October too. Gap. So you have a gap right there. You also have you have so many gaps. You have a gap right here. You have a gap right here. All this for PayPal. And so if you get that 3-1, and what else did PayPal do? It did a 3-2 down on the week. Okay, so it's a TMG. 3-2 down on the week, and on the 3-week chart, it did 1-3 rev strat, 1-3 rev strat, and the next 3-week chart, the 3-week candle will open on October 3rd. So imagine, y'all, when I talk about putting all the actionable signals together, you got a 2-week chart that's a 3-2 down, 3-2 continuation on the 2-week. You got on the 1-week chart 2-2 down on the 1 week. On the 3-week chart, you got a setting up for a 1-3-2 down next week on the 3-week chart. And on the month, you just triggered 1-2-2 rev. Like, so when we talk about TMG and like having, and not only that, you got 3 gaps to the downside, and it's giving you an actionable signal on the daily. Like, if they really pop this up, that's just like FU. That's really just on some FU shit. They was like, nah, we ain't giving it to you. But everything is like, the downside is like, yo, market want to tank. PayPal is like, I want PayPal. Like, because it has so many targets to the downside. And we just triggered 1-2-2 rev on the month. Y'all saw what SPY did on the month. It's price action anywhere, it's price action everywhere. 1-2-2 rev on the month. That's SPY. So what you think PayPal can do? 1-2-2 rev on the month. I want it to go to $60. Oh, J-Man, good shit. But yeah, so hopefully this helps. Hopefully this makes sense. Like you know, candle structure, and like, you know,
at what point do you start buying some of these shares?
Bro.
Apple was the last one. Oh, like Apple falls that, you know, kind of.
So
literally just hoard cash.
I literally just meant
hoard cash. You could cost average, but like Apple, I don't think it's.
like, if you guys like think about this, like what is currently going on in the market, like in the world and like economics right now. Inflation is raging. Like, if you can compare it to where it was a year ago, we ain't doing shit in terms of like fixing this solution or whatever. So if they like right now, like, you know, in terms of like, you know, raising the basis points or anything like that, tech is going to get hit. The more interest rate goes up, tech is going to get hit. So because tech is going to get hit, I'm gonna like, I ain't fucking buying tech. That's me. That's just me.
Let me ask you a question this here, bro.
Yeah.
I keep seeing some people say like Apple's under $100, Amazon $80, but my thing is, if them shits go that goddamn low, man, we're gonna be in a depression, not a fucking recession.
Shit, I don't know. I mean, with all this quantitative tightening going on, man, I don't think we're gonna go to depression. I don't think so. I mean, I don't know. What do I know? But I don't know. I think Mark still got some more downside. Just fundamentally wise. You said what?
I think we'll.
Yes, sir, Charles. Yes, sir. You got it right. Yes, sir. Oh, okay. And Charles, so with that so with this picture that you're showing, you have, that's your ultimate price target, but you have price targets before that. The price targets you have before that is gonna be below that 3, that red 3 candle. That's what, 1, 2, 3, 4 back. 4 back, that's going to be a target. And then the 2 that's following that candle, that's a 2 down, that's going to be, that bottom wick is also a target. So those wicks to the downside, those are also targets as well. So you see how that will mean you have a target at around that 82.40-ish, and you're going to have a target at here, let me actually mark it on this. I'm marking on my screen. There. So that means you will have a target, and these are monthly pivots. 82.12, then 71.83. Do you have that? If you mark those, let me know if you have those as well. All right, perfect. So yeah, you got it. That's essentially what you just done. Is you learned how to, or not learn, because you probably know this before, but you've seen a potential actionable signal to the downside, and now you place targets as well. So if we do, we already triggered 2 down on the month. So I'm just waiting to break this and force, but now I'm pissed off because we might do it tomorrow and I'm not in. And so I'm gonna be looking to get like November. I forgot what I was looking at. I was looking at November's or for PayPal. But yeah, essentially that's how you would play it. Zalifar, I'll talk about J&J. So J&J still hasn't broke my oh, this is not the right. This is the right. So for J&J, I have two stop loss levels. I have 50% of the previous week and I have 50% of the previous 2 week. And then my ultimate stop loss level is going to be the 160 break. The reason why I haven't gotten out of J&J yet is because of the fact that we've still been making higher lows on the daily time frame, right? So right now, as of right now, I'm hoping this gap down with that happens tonight. It's not going to have such a big effect. But because of the fact that buyers have been still holding this 50% mark in the 2 week chart, and we went up today, I like to see this. J&J was a beautiful example of like, if price went up, it still went up. Like J&J went 2 up on the day yesterday, but then it retraced back, and then today it went 2 up on the day again, right? And so if you're in the weeklies, I believe you're able to be profitable. But that's what I mean. Like if price goes up, it's not just done going up. It's not gonna stop going up. The only way it's gonna stop going up is if it reverses, right? Because that's the only way. So unless it reverses, like then I'm not gonna be getting out of the play. And so mind taking a look at play? Yeah, I will. Hopefully that makes sense. So I'm marking my levels to see where do I get out. I have my 50% fib at 165.16, and I also have my second one at 164.22. Because we didn't break my second level, and this is a perfect example of like, okay, when you hit one of your stop losses, assess the play. So we hit this 50% of the previous week, but then we're still wicking this area and we're still creating a higher low. So I'm with my risk profile, I'm still okay with holding J&J as long as we don't hold below 50% a week. Now tomorrow, if they reject it and they're like, yeah, we're not going to give it to you, and then now we hold below 50% 2 week, then I'll get out of the play and I'll look to get another one, right? But that's why I'm still in it, because it's still holding my my technical stop loss. Hopefully that helps. Any other question? Oh, let me talk about play. 3-1 on the day. Draw your Broadening formation. Draw your Broadening formations. Draw them.
I don't think it's too late to get into PayPal, right? Even if it kind of dumps.
Only thing I don't like only thing I do not like about this market is that all these setups to the downside look so juicy. Like, but it's like we've been going down for so long already. And so when is the relief gonna come? When is that, this happens to me. Like when I see these downside setups, it happened to me last time too when I played Facebook. I remember I got in Facebook puts the day Facebook started to reverse for like 50 points after. Like it was crazy. But anyway, so when I look at this market, because of just my history with it, when I see these setups, I'm like, these setups look juicy, but the risk to reward is not that great compared to the upside. If you were to just PMG back up. So you got hella 2 down days to the downside. So it's like, if you just PMG back up, the risk to reward to the upside is much more greater. But if the market just says, fuck it, we just going down, I guess, like, I like PayPal. I really do like PayPal. So I really want that 122 euro in the month. So I don't think it's too late. 168. Plug 3-1 on the day, 2 down on the week, 2 down on the 2 week, inside month. Is it we have a gap? Oh my god. 2. Also got a demand zone. They're not gonna give you the gap in a day. Where's the month? can take it to the monthly. They give it to you. I would take, my target would be the 2 down on the month. If the market will give you the entry for this 312 down, when does a quarter flip? They're not gonna give. I like 312 down into the monthly target. The monthly entry at $20.55 to go 2 down on the month, 2 rev on the month. That would be my first target. They might gap it down though. That's my. Any other questions? Gonna be wrapping it up. I appreciate you all for being here. And I hope you enjoyed the lesson. I hope everything makes sense. Yeah.
Are you gonna post this on YouTube? Or...
Yes, I will. Yes, I will.
Awesome. Thank you, Adex.
You're welcome. You're welcome. Any other questions? Good. All right. Appreciate you guys, everyone. You guys have a wonderful night. Of course. Make sure you draw your levels for tomorrow. Hopefully it's not failed triggers. We're looking at failed triggers right now, but we'll see. All right, y'all. You guys have a wonderful night. Get y'all later. Peace. Peace.